Today we're going to discuss how to trade using MSP ALGO Money Flow to consistently win 80 to 90% of your trades on a regular basis. As we know, 90% of traders lose money trading. If you tell someone you're a trader, they'll immediately say you're a gambler. Now, that is the case if you don't have the insider's information as far as the money that is flowing in or out of a stock. Okay, so what I'm going to do today is discuss what is the money flow and how to use it to win 80 to 90% of your trades consistently. So what exactly is MSP ALGO Money Flow? What is it tracking, and why is it different than any other money flow? Well, most money flow track the market. Let's say if there's a stock like CMG, for example, the money flow will track all of the money that is flowing or transactions for that particular stock. Why is MSP ALGO Money Flow different? Because MSP ALGO Money Flow is not tracking 100% of the transactions. MSP ALGO Money Flow is just tracking the top 10% that have 90% of the money. The movers and shakers. Whatever the top 10% do, the stock price will follow. And that is the secret to winning 80 to 90% of your trades on a regular basis, is to follow the top 10% of traders. So with the money flow, we develop analytics, which is the foundation that run the stock market money flow analytics application and MSP ALGO artificial intelligence trading bot. So we'll get into the more advanced version of the application, but today we're just going to focus on what is the money flow, so we understand that the money flow is the order flow of the top 10% of traders with 90% of the money that actually move the stock. Whatever those traders or investors do, the stock price will follow. We ignore 90% of the transactions and focus on 10% of the transactions. Why is that? There's a difference between the hedge funds, institutional traders, and market makers versus an average retail trader. The top 10% have 90% of the money. So that includes the retail traders that have 401k and mutual funds and things like that. So by following just these, the top 10%, you know what the stock is going to do in the future. And that is what is the secret to our success. Okay, so let's look at, and so what does it tell you? The analytics tell you what happened, they bought or sold, how or why did it happen. We see the big players are buying or selling a stock. What is happening now? The stock is going up or down. And what is likely to happen in the future? That stock is going to go up and down, okay? So how do you trade it in order to win 80 to 90% of your trades on a consistent basis? All right, so we're going to do some analysis. We're going to look at CMG. And I want to trade this stock, okay? It's pre-market. I heard some negative news about an outbreak of food poisoning. And I just want to gauge what is going on in pre-market, okay? So I'm going to look at the money flow. Now, you could choose what symbol you want. You could choose what type run type. The run types are pre-market, after hours, rolling, which is every 4 hours, daily, weekly, and yearly. In this particular scenario, we're looking at trading, day trading. So we want to see what's going to happen in pre-market based on that news. So we see that we have a start time, a start date, a start time, an end date, and an end time. So you could easily drill in based on a higher time frame, or if you just want to get a 10-minute, what happened in the last 10 minutes. In this particular scenario, I want to check out pre-market before the market open and see what's going on. What are the top 10% doing with their money? So I could see that I did a search for CMG, the symbol CMG. So now we have the signal, the symbol. Signal says if it's bearish or bullish at the time based on looking at a chart. The price, current price of the stock. What is the buy volume? We see 9,000. What is the sell volume? We see about 150,000. And just a total based on the price, what the money inflow and outflow is. Overall, is the money flow bearish or bullish? Is more money going in than out? Short long signals are based on what's showing on our MSP ALGO charts. These are indicators on our charts. If you haven't seen that video, look at how to read MSP ALGO charts. What is the ratio? The ratio talks about how much money is going in versus out. So in this particular scenario, for every dollar going into the stock, $16.40 is going out. A price action divergence, a negative divergence means it's bearish. A positive divergence means it's bullish. We got a buy price. What price are the traders that we're tracking buying this stock? Or what initial price were they selling this stock? And what is the current trend of the stock based on a longer time frame, based on a daily chart? Okay, so that's the information we got. So we look at the money flow, and we could easily see that in this particular scenario, that we have a lot of money flowing out. So that is just CMG. If I went to all, I'm going to show the condensed version. I can look at all of the stocks, okay? So, and I'm looking at pre-market. And so I could scan and gauge what is going on before the market even open up. The market open up at 0400, and the actual normal market hours is 9:30. So I want to know what is going on. So I could see that we could see these stocks that we follow the money flow on, and we know what information is contained by looking at the columns. We also see some highlights. What does that highlight mean? That highlight is just to say, hey, this is particularly a bullish. If money is flowing in, let's say 4 times more than flowing out. And same with the red is bearish. If money is flowing in 4 times, flowing out 4 times more than flowing in. So it'll get highlighted, same with the versions and everything like that. And it'll always show you what the daily trend is. Okay? So that way you could easily scan before the market even opened. So let's talk about some tips and tricks with after observing the top 10% and how they trade. Okay, so they see a stock that they're interested in or they want to get out. Okay, so let's look at DIA. We could see that there's $45 flowing in versus $1 going out. That's the ratio, right? So what's going to happen when a market opens? Most traders will think, run into DIA ETF and buy, right? No. Let's single out DIA here. Normally, institutional traders trade different from retail traders. So if they buy, they don't want to spike the price, okay? So we could see they started buying. The buy price initial was $252.85. They bought, they pushed price up to $253.68. So they don't want to trade against themselves. So what they'll do is they'll push price back down, most likely below this buy price. And then they'll buy again. Okay? So when you're looking at the money flow, whether it's bullish or bearish, you want to focus on trying to buy where they bought. You don't want to just jump in the stock because you're excited and euphoric and see all this money flowing in, because it'll reverse on you because they don't want to trade against themselves. So that is one key you need to know about the money flow, okay? Is they'll push price up and then they'll push it back down to where they bought before until they accumulate the amount of shares that they wanted, and then the price will move, okay? So it'll kind of be like in an accumulation and distribution phase before the move, okay? Accumulation means that they're going to be buying. So in accumulation, price goes back down. In distribution means that they're going to be selling. And so in distribution phase, the price is going to go back up to the sell zone. Accumulation, back down to the buy zone, okay? So that's pretty much how the money flow work. And let's go back to CMG because that's going to be our test case. So we see that we had some bad news. There was an outbreak again, and it was just really unfortunate. This is a really good company, and but we're traders and we're not in love with any stock. We're looking to go long or short. And long means you think the price is going to go up. Short means you think the price is going to go down. Why? Because we know that the top 10% of traders that we follow will move the stock because they have 90% of the money. So we're almost sure that stock is going to pull back today, okay? Somewhat. So in pre-market, we see this is at 448. So let's look at the chart. So you do all this observation in pre-market. So you know what's going to happen before the market open. You are therefore predicting future price action with an 80 to 90% accuracy rate. Okay, let's see if it works. All right, so we're going to replay CMG. This is in replay mode, so we could replay this scenario. And we're looking at our chart. Here we got the 10-minute. Here we got the 60-minute. And we're going to go look at the 10-minute. We have after hours and pre-market on our charts. These are trading view charts. And so they provide that opportunity to the trader. Okay, so we're going to look and we see that this is 7:50 in the morning. And we already know our institutional traders are selling. Okay, so we're going to go to before the market open. Let's play this. And we want to go to right before the market open to see what is going on. So we could see that they're getting out. Now, what you notice here is we have a pivot. This is a lime green pivot. And that said detects selling pressure or resistance. Notice the pivot is close to the price in the money flow. So here it says 466, and we got a pivot here that says about 461. Okay, so that's at 8 o'clock. This pivot came a little bit. Market open at 4 a.m. So let's go fast forward here. And we could easily see our institutional traders are selling. So based on this, we are gauging that they're trying to get out at a rapid pace because this is falling rapidly. So what we need to do is we need to know where is support. Where is support? So this is what we're going to do. We're going to draw some support and resistance lines based on in our chart here. Okay? We don't really have to, but we're just going to do it for because the pivots will tell us, but we just kind of want to gauge what is going on. Okay, so let's go back in the replay mod here. Let's change this back to 10 minutes. And we want to go back to pre-market before the market open. So right here is right before the market's about to open. So we understand that what the people or traders, the market makers, the institutional traders are scrambling. Okay, they're scrambling because they feel like once the market open, that's where 90% of the traders trade. The everyday traders, you and I. People got a hold of this news. They're probably going to dump their shares. So they're trying to front run the sellers. Okay? Okay. we understand that what they do, the market's going to follow. There's an 80-90% chance. So when the market open, we're looking to short this stock, okay? So let's, so this is 910. We got, so it's 9:30 right here, okay? So looking at this, we understand that 450 is resistance, so we want to try to short 450. We see that price pulled back. We understand how distribution and accumulation work. Distribution retests resistance. Accumulation retests support. So we broke support. We know that 450, and also the pivot point is telling us that 449 is resistance, because we could see that the candle went below that. So we're hoping, based on knowing how distribution and accumulation work, that it will retest that 450, and that'll be a great short opportunity to next support. So we're gonna, so we're looking at shorting the 450. We got our first target. We got our first target is 442. If that don't hold, we got our second target at 435. And if that don't hold, we got our fourth target at 425. Normally, once price break three support levels, it'll bounce, okay? So we're not thinking we're going to have more than 3 to 4, this won't break more than 3 to 4 support levels. So what we want to do is, once we get into that trade, we want to sit and monitor our position, because this is going to be very volatile, okay? And you have the two type of traders. You have the traders that are already in the stock that want to get out because they're in fear that this may cause the stock price to drop. So we expecting that when market open, and we already know the big players are getting out. So there's an 80-90% chance that this stock is going to drop at least to that 442, 435 area. And also, we know that there's people that think there's value. They like to see panic to buy. So we're going to have two type of traders that we're expecting on this move. Okay? So we got our sellers that are panicking and waiting to dump once the market open. And then we have our institutional traders and market makers that need to protect their position, and they're already dumping. They started dumping a long time ago. They're at 468, right? As soon as market open, see the drop. Okay, so there go the retail trader. So we're gonna do like this. So here go the top 10% players. We know they always know everything in advance. They pay for their news. They don't rely on the news that retail use. I used to work for the big financial companies, and they pay about $10,000 a year for news in advance, okay? So they're very reliable. We don't need to pay $10,000 a year for news, because all we have to do is follow them. Your goal is to follow the money. Your goal is not to think about what's going to happen. Are they buying or selling? And you follow them. So these are the top 10% with 90% of the money. And we know that stock's going to follow them. It's a no-brainer. We know where support and resistance is. So they're dumping, right? Now there go retail. They watch the news. They got their news later on. So now the retail traders that are in this stock, the 90% with 10% of the money. So here go the 90% with 10% of the money. So we know there's going to be a major volatile reaction when the stock open up. Okay? Not everybody could trade in pre-market. So they wait until the market open. Institutional traders love pre-market and after hours. It gives them the advantage they need to get in and out of a security at record speed. Okay? They normally know news in advance of the dance, of the price action dance, okay? So, the market opens up, it's 9:30. It opens up at 448. We're looking for a price to retest resistance was our strategy of what we're thinking, right? Because we know how distribution works. It hit that 450. And let's see what happens. So now we're in that trade. We short. We already prep. We're short. And we know that we got backing by the big boys. That's the key. You want your move back by the big boys. So right now we're short CMG at this 9:30 candle. When the market opened up, 9:30, 9:40 candle. 9:30 when the market opened up, and let's see what happens here. So we bought at the open. We was already prepped. We knew there was going to be a huge dump. So from that 450, it dropped immediately to 443. That's our next support. It's close. We're looking at hitting that support. It doesn't look bullish yet. Retail came in and they added to the volatility of the security. You see the pivot came, so that meant that there were traders thinking they could buy near this 442, but there wasn't enough. Let me replay that for you so you can see exactly what happened. And so we're going to replay that back. So let's go forward. So you saw that pivot? So that tells you, that's how this chart, these pivots are. They know bottoms and tops. It'll catch it. It detected there was some buyers there, and then the sellers overwhelmed those buyers. So it said no. So you notice it identified that fib support, right? Okay, now we're not here to talk about the pivots. We're actually here to talk about the money flow and why you could win 80-90% of your trades on a regular basis using the money flow. Okay, so now we see that it's 10 o'clock and price hit our first target, and we see these little tails like near the 438. So we're concerned, is this price gonna bounce? So what do? We're gonna drill into the money flow. So this is the 10 o'clock candle. So we want to look at the 9:50 to 10 o'clock time frame to see what do we want to see? We want to see, are there any of our people that move the market buying the security? If they're buying the security, it's gonna hold. We want to see them still selling. We don't care about the 90% with 10% of the money. We care about the top 10% with 90% of the money. So we're going to look at, we're going to drill in to the money flow and see what is going on. Okay, so I have this as a one type of daily, but I don't really need to change it because I'm going to customize my search. So we know that we had a 0950 candle and 1000 candle, and we want to see what are our 90%, 10% with the money doing. They're still selling, right? We could see that in that 10-minute time frame, they are still selling. So we're good to go. So let's go back to the chart and watch our trade. Okay, so we're watching our trade. We're gonna hold. We thinking we could hit that target of 435. That'll be a $15 drop in since the market opened in about 30 minutes, which is big money. Okay, so it just depends on how you short this. Some people could short the shares, and some people would buy the options. It's best to buy an option in the money. Sometimes that may be costly, so you may want to buy a put option at where you thought your target would be hit. So if you thought it was 442, you want to buy that. Always buy at least the next support. That way, when you exit your position, you'll be in the money and you benefit by getting almost the full move of the stock based on the delta. Okay, all right, so let's continue trading CMG using MSP ALGO Money Flow, which only check market makers and institutional traders with 90% of the money. We know the stock cannot bounce without them. Let's go. Wow, there was a huge dump here. Oh my God. It broke the 435 support and it's almost near the 425. Now it hit our target. So at this point, we know that price is near support. It broke 1, 2 support, and now it's near the third support. So now what we want to do is we want to look and see if the institutional traders are going to buy this price, right? Because every time it gets to support, we want to see if the institutional traders or market makers or the top 10% is going to stop price from dropping like a rock. Because we know that what they do, the market's going to follow, okay? So we're going to go back to the app and look and see what is going on. We're going to drill in to the 1050. We just want a 10-minute here. Oh my God, there they go. They're buying support. It's time for me to exit my trade. Okay, so we did that time frame. Let's do this because we did Let's see when they actually started buying. Since we skipped some of the 10-minute time frame. Okay, so we caught it pretty quickly, right? So we know it's time to exit our position. Do not play around with the money flow, especially if it already broke support levels, okay? And we know this was going to be a high volatile process, okay? So we know we need to get out of trade, and we need to get out right near that 425 support, okay? So let's go back to our chart. Okay, we're out. We cashed out. Based on what? Based on the top 10% of traders that we follow. We're out. We put our little money bag in here. We paid $100 for, let's say it's just hypothetical, to short this. By the time price got here, our money bag got 4 times bigger. So for every $100 we spent on this trade, every 100 turned into 400. So we got 300 additional dollars. Okay, it just depends on how many shares. I'm talking from an options perspective. If it's from a stock perspective, obviously you would have got a $25 short. Okay. So we exit right here. We don't play around. We exit and reassess. Let's see what happens in the future. We saw our boys. Okay, so now we see that this stock is starting to bounce. And it did look like it's holding at 425. And so this helped us, because it told us that, number one, just looking at the money flow, that we had to get out of that position by monitoring the 10-minute time frames. So that is how the money flow works. And that's how you can easily, on a consistent basis, win 80 to 90% of your trades on a regular basis. And there is nothing like this on the market. Believe me, there is nothing. All the other money flows is monitoring the whole market, or they really don't know what they're monitoring at all. We monitor the people with 90% of the money only, and we know who we are following. This is not a guessing game here. So can traders make money consistently 80, 90% of the time on a regular basis? You betcha. Okay? So that is how MSP Algo Money Flow work, and that's how you can win trades consistently. And you don't have to guess what price action is going to do. So we're gonna do another video, and that is going to be based on how to use MSP Algo Artificial Intelligence Trading Bot in addition to the money flow to win 90% plus of your trades consistently on a regular basis. So please subscribe today, and we'll be creating a lot more videos. And happy trading.